OpenAI, the company behind ChatGPT, one of the most talked about companies in the world, they were ready to go public this year. Papers filed, bankers hired, and $1 trillion target locked in. But then suddenly they got cold feet and then they pushed the whole thing back to 2027. Why? Because of one company's stock chart. And that company happens to belong to Elon Musk. This is Jalal Safti, and you're watching the Primexar podcast. Here's the backstory. A few weeks ago, Elon Musk's rocket company SpaceX went public, the biggest IPO in history. They raised $85 billion. On one day, the company value reached to $2.7 trillion. That made Elon Musk the world's first trillionaire. Whether that's actually a thing or not, we will get back to this one later. But now, our main focus in this episode is OpenAI. They were watching everything happening very closely because they were planning to do the exact same thing, going public, hopefully at a valuation of $1 trillion of their own. But why did OpenAI get scared? Here's the timeline. SpaceX went public on 12th of June at $135 per share, and then the price went up within days to $225, a 40% surge. Normally, when a company this big goes public, the shares go to institutional investors long before regular people get a chance, and by the time they get to buy in, the price has already gone up. SpaceX did something different. They allocated 30% of their IPO, around $20 billion, to the retail investors at the same price, at the same time as the institutional investors. This almost never happens. The demand was so high that not everyone who wanted shares actually got them. This gives you a sense of how much appetite was there. But then the stock gave almost all of it back. By 26th of June, SpaceX shares had fallen to $152, practically backward started. Around 30% drop. And OpenAI CEO Mr. Sam Altman, he was watching all of this happen in real time. And looks like he had second thoughts. Well, fair. The advisors of OpenAI gave Mr. Altman two options. Go public this year as scheduled but at a lower valuation, or wait to 2027 and try again with that $1 trillion number that you want. Mr. Altman, he thought about it and his answer was any OpenAI IPO below $1 trillion is called a non-starter, which means 2027 it is. But looks like this is a rough year for OpenAI. Things are not going so smooth for them. 3 days ago, Apple sued OpenAI for trade secret theft. Now, here's the funny thing. Apple and OpenAI are actually partners. ChatGPT is built into your iPhone, and still, Apple is taking OpenAI to the court. Allegedly, OpenAI has been asking Apple employees to bring prototypes and Apple technology with them to the interviews as part of show and tell. But this is not the only battle OpenAI is fighting right now. Their main rival, Anthropic, the company behind Claude AI, they filed their own IPO 1 week before OpenAI did. And they also watched the whole SpaceX performance unfold. But they said, actually, we're fine. We are still going as scheduled in October 2026. No cold feet. Also, Anthropic is close to its first profitable quarter. $10.9 billion expected in revenue in the second quarter of 2026. Meanwhile, OpenAI is still losing money. $14 billion projected losses in 2026 alone. Here's the practical takeaway. If Anthropic goes public in 2026 at or near $1 trillion, this will be a reference point to any analysts who try to value OpenAI in 2027. OpenAI, they cannot price themselves independently anymore. They will be compared to Anthropic whether they like it or not. So the company that goes first will set the terms to the other one. And this is not just a race about who gets there first. It's about which company will get to define what an AI company is actually worth. And in case you didn't know, these two companies are not just technology competitors. Anthropic was founded by the people who walked out of OpenAI. They disagreed on direction, on privacy, and they have been disagreeing publicly ever since. So, this beef is not a new thing. It's been going on for years actually. The only difference is that they are taking it to Wall Street now, which is far more entertaining. Keep an eye on October 2026. Now let's go back to the trillionaire story. While the two companies were at each other's throat, Elon Musk briefly became the world's first trillionaire. It took him decades to get there, and it took the stock market 2 weeks to take it all away from him. On one day, SpaceX shares dropped down so fast, 22nd of June, and then Elon Musk lost an estimated $240 billion from his net worth that was estimated around $1.45 trillion. It fell to an estimated $946 billion only. So that trillionaire title? Officially over. Now, before you start a fundraiser for him, he still has $640 billion more than the world's second richest person. This year alone, he made $326 billion. So, he's fine, I guess. And when we say a trillionaire, that doesn't mean that Elon Musk had $1 trillion sitting in his bank account. It means that the share he's holding is worth that much on paper. If Elon Musk tried to sell these shares, the price will crash long before he gets anywhere near $1 trillion in cash. So, it's not quite a thing the same way $1 billion in your bank account is. That's it for today, everyone. If there's any lesson learned, is that paper wealth moves very fast in both directions. Even the world's most anticipated companies are watching each other's charts before making the next move. Don't forget to follow us on Facebook, Instagram, and YouTube. Believe me, you want to be here to know what happens in October. This was Jalal Safti, and you're watching the Primexar podcast. See you in the next one.